Bingo, 2 o'clock rock here on Tuesday with Think Tech Asia with Larry Foster. Larry Foster was the dean of the law school, William S. Richardson Law School, for quite some time. And in fact, he was ostensibly the boss of our own director and vice president, Carol Monlee, who was here in the back of the studio. Full disclosure.
Yeah.
But there's some issue about who was the real boss.
Yeah. There's no issue.
Inverted management kind of thing.
Yeah.
And then he went off, sailing off to China, where he and his wife were big time all over Shanghai in the American Chamber of Commerce and the law firm there. And Larry can speak, Mandarin. So if I say ni hao ma, you know what to say.
好，谢谢你啊。
I knew you'd say that. And now he's back, and he's a professor at the William S. Richardson School of Law. And I guess you must be teaching something about China and China investment hither and yon.
Yes.
Okay, so we should talk about that today.
Okay. Sounds like a good deal. Sounds like a good topic. It's certainly timely.
It just strikes me that China has, achieved all this foreign currency, and they have, trillions in the bank. They don't know what to do with it, either government or individuals, and they want to park it somewhere. They want to make some money. They don't want to leave it in China. They want to invest it somewhere, and they're smart about that. Yeah. And they're, little by little, they're kind of taking over the world. I remember one of the lawyers who was in the Hawaii-Shanghai exchange program worked for civic. And she was in charge. I mean, her firm, it was a large firm in Beijing, worked for civic, and she was in charge of the Chinese government investment projects in Africa. What do you think? What kind of a day is that? Wow, what a job!
China was doing and still is doing a lot of work in Africa. A lot of it infrastructure projects that they get involved in down there.
Yeah. Everywhere, really. I mean, in South America, too. They do steel mills in Brazil. I mean, everywhere you think. And one thing that we've discovered in the diplomatic side of our inquiry in Think Tech Asia is that the Chinese connect these projects with soft power.
Yes. And
they, usually try to get some strategic diplomatic advantage, and they're doing that everywhere. So we're dealing with a very aggressive, global policy here. Yeah. It's not just
and
investment.
Increasingly sophisticated.
Yes.
Global policy.
So tell us about the way it looks to you as a global policy. I mean, why and in what manner and what level of commitment?
Well, certainly at the highest level, China changes rapidly, but China's had a long history of sort of feeling oppressed. One of the things that they talk about is their history of national humiliation, and their resolve to remove that. And
stand up, China.
Stand up, China. And one of the ways they do that is we were talking just a minute ago before we started the show, a dramatic increase in their soft power initiatives. A good example of that is an institution called Confucius Institutes. And what they've done is gone around the world and provided to universities that are willing to take the money to set up a Confucius Institute at a university. University of Hawaii has one. And they provide financial and personnel support to promote the study of the Chinese language, provide scholarships for students to, in the U.S.'s case, U.S. students to go to China and study Chinese. So that's a good example of what you can do if you have the financial resources, which China does, and a desire to sort of increase their soft power initiatives. And to me, that's been one of the more, I think it's the best example of their soft power initiatives.
But I remember, Rosita Chang, who was in the Shiloh School, teaching a professor there. Yes. She was managing the Confucius Institute in the University of Hawaii, and there was a time when she was very active and doing outreach into the community, programs here downtown, including at the Plaza Club. Teaching not only the university, but the world, the world in Hawaii anyway, what the Confucius Institute was about. But I also remember more recently, the Confucius Institute was criticized as being just a propaganda organ. And in some universities, they've been shut down, no?
I don't know if they've been shut down, but when the concept first came out here in Hawaii, would Hawaii want to have a Confucius Institute? There was great concern among some people, concerned that this really is just a propaganda arm, and you know, we don't want to have the Chinese here, and certainly not the communist Chinese here getting into the hearts and minds of our young people. So I assume that criticism still remains.
Yeah, but if you look at them, if you know this, if you know where it fits and why, it really isn't problematic. I think the Confucius Institute is very interesting.
I think so. I think you know, the U.S. certainly gets involved in these in this kind of soft diplomacy as well.
Sure.
And I think they're great ways to for people across cultures to literally talk and communicate, and in this case to give more introduction of the Chinese side to the West. And I am a firm believer of communication across cultures.
Speaking of which, I wanted to suggest another example of the point you make, which is CCTV, which was internal to China only a few years ago, and you know, the powers that be decided they wanted to make it global because they didn't feel that the global media was representing the interests and the viewpoint of China well enough. So they decided to make their TV media, you know, organ global and represent the interests of China, and they have done that in a remarkably short period of time. They're everywhere.
Yes. Yeah. So you can watch it here in Hawaii.
Yeah.
It's good to get these, as you point out, these different perspectives on the world. When my wife and I were living in China, we would watch CNN, but we would also watch BBC. We would watch Deutsche Welle, the German TV.
Al Jazeera? They have it there?
I don't recall that Al Jazeera was available. But you know, you get different perspectives.
Sure.
You know, the difference between what Honolulu Star Advertiser thinks about what's happening in the New York Times, even within the U.S., those different perspectives.
Yeah, on the same story. You see how they look at it. Yeah,
exactly.
It's very interesting to do that, but you have to go in knowing that they're coming at it from their point of view.
No, absolutely.
Yeah,
absolutely.
Yeah.
As we are coming at it from our point of view.
Yeah.
So
do we really? You mean we might distort the story just a little here in the American media? A little?
Well, you're a media guy. I'm not going to criticize you on your own show.
We're special.
Yeah.
Anyway,
exactly.
so okay, they want to get out, and you know, they have a plan to invest. I mean, why? Okay, they got a lot of money. They don't know what to do with it. They want to invest it hither and yon. Why?
So I guess so. I'm a lawyer. Sad to say for your program. So part of the things that lawyers do is we define words. So who is they? So if they is the Chinese government, and let's start with that they, because there's very different theys in China with very different intentions. The Chinese government, and I don't remember the precise year, but it was about 2010, made a policy decision that they wanted to encourage Chinese businesses, public and private, the state-owned enterprises as well as private companies, to go out around the world and invest. And up to then, it was near impossible for them to do that.
Government didn't let them take the money out of China.
Exactly. So if you recall in Hawaii in the late 70s and early 80s, the Japanese investment, that didn't begin until 1978 in Japan, because it was in 1978 in Japan that the Japanese government, federal government, made a decision to allow Japanese businesses to get foreign currency, take it abroad, and invest abroad. And the rest is history. They went on a buying spree for a number of years.
Often spending too much on trophy properties.
Yes, exactly. And so in 2010, exactly the same thing happened in China. There's an agency there called, it's a great acronym, SAFE, S-A-F-E. It's
wonderful.
State Administration of Foreign Exchange. So if you have a bunch of Chinese dollars and you want to trade them into US dollars or francs or pounds or whatever, you had to go through SAFE.
And in Mandarin, that's safe.
That's safe.
S-A-F-E. Wonderful the way that works.
Yeah, yeah. There's always been, how would I describe these, other unofficial avenues of foreign exchange. But if you're going to, for example, there's a Chinese insurance company that's in the process of trying to buy Starwood hotels.
Sure.
And they're offering a mere $15 billion to purchase Starwood hotels. Well, before 2010, they couldn't do that because they could not, they have assets in China, but they couldn't convert those assets into the US dollars that were required to do the purchase. So this, because it's hard to come up with $15 billion unless you have an avenue like that. So China's, I think you mentioned just in passing, China has immense foreign currency reserves. I don't remember the exact number, but it's around 5 trillion or something like that. So they're allowing these reserves to sort of be lowered a bit to allow to take out, to exchange the renminbi, the Chinese yuan into foreign exchange, foreign currency, to go out and do all these purchases.
Is it because they cannot make a decent return in China, investing the money in China, or is it something else?
It's not the government, it's the companies.
Okay.
And that is part of it. So there's a company, Haier. I'm looking around your studio to see if you have a mini refrigerator. Probably 80% of mini refrigerators in U.S. student dorms are manufactured by a company called Haier.
Corner the market.
It was a niche market. They've built a production facility in the U.S. They have an R&D center in the U.S. They decided that they wanted to sort of up their game. And they wanted to up their game for a couple of reasons. One is that as the Chinese economy is sort of slowing down, hard landing, soft landing, I'm not an economist, so don't ask me that question, but it's slowing down.
Yeah.
So their sales in China of what are called sort of the high-end white goods, refrigerators and dishwashers, washer, dryer, these kinds of things, were at least plateauing. Probably not disappearing, but plateauing. They weren't getting the kind of growth that they were five years ago.
How does this comport with, I think it was Hu Jintao's initiatives to do consumption, to build Chinese markets instead of selling their goods outside?
That's an interesting question. I'm sure there's a more direct connection, but part of what Hu Jintao was doing, and his predecessors as well, was the building of the Chinese brand.
Yes.
So what Haier wanted to do was to get into the high-end white goods market in the U.S., in part for branding purposes, in part for that's where the action is. The U.S. economy is turning around, and our white goods market is doing quite well right now. So they wanted to come in. So they bought GE's appliance division for a mere, I think it was $5 billion or something like that.
Yeah.
So this is a private company, close government connections, but it's not a state-owned enterprise. But the government would have supported it, and I assume did support it, again, sort of building the Chinese brand.
That means quality?
Yes, so I'll give a good example of a successful rebranding. Some years back, there was well, still is, but a Chinese computer maker, Lianxiang. And Lianxiang wanted to get into the international market. So they went to a little US company called IBM and say, we'd like to buy your laptop division. And IBM said, you got cash? And they said, yes. And they rebranded it as Lenovo.
Yeah.
And now Lenovo is
it's huge
international brand.
And it's a quality brand.
And it's a quality brand.
Yeah.
So all those things have been very have proven often, not always, often successful.
So therefore, they would be very concerned about things like the melamine scandal. They would be very concerned about quality control.
Yes, I'll refresh our listeners and
They,
viewers.
we're going to get it.
No, I'm coming back to melamine right now. So China had a growing domestic milk production market and or industry, and some enterprising milk farm. And in China, there is no agribusiness. Actually, that's changing, but there is no. At that time, there was no agribusiness.
A lot of little independent farmers.
A lot of little independent farmers. And a number of these little independent farmers found out that, yeah, they can sell this gallon of milk, but if they add stuff to it, take the milk and add really cheap stuff, inexpensive materials to it, they can sell 2 gallons of milk for the price of 1. But then someone's going to test it and say, oh, this doesn't test out as milk. Well, it turns out there's a chemical called melamine. And if you put melamine into water, it tests as milk. So, so they put it into there and just went up the supply chain. Unfortunately, melamine is a very toxic chemical, and a number of children, and so it was put in milk powder and stuff like that. And so a number of children in China were severely damaged by that particular incident. So the Chinese government, in large, and I was trying to remember when that was. That was probably
just before the Olympics.
7 or 8
or
years
just
ago.
after the Olympics. It was known before the Olympics, as I
Yeah.
remember,
Yeah.
but it was punished after the Olympics.
Yeah. So that really stepped up the government's game in trying to show to the people that we are here to protect you, and we will crack down on this. Although interesting, the cracking down they did was that they the head of the overall milk company, I forget the name of it right now, she was sentenced to death and was executed. But the farmers down on the farm, I'm not sure whatever happened.
We're actually adding the melamine.
Yeah, but it should have been caught as it sort of went up the line.
Yeah.
So food safety is an incredibly important issue to the.
But it goes to reputation at the end of the day. You know, are Chinese goods really quality? Are the tolerance is good? Are the manufacturing techniques designed good?
So what happened internally in China then was that this burgeoning or starting to get off the ground milk market disappeared because nobody trusted Chinese milk.
Yeah.
The Chinese did not trust their own milk.
Yeah.
In the years that we were there, I started off drinking Chinese milk, but after the melamine scandal, we only bought milk from New Zealand, and as did a lot of Chinese.
Yeah.
But let me come back to Haier, and actually Haier and another company. You probably never heard of them, but they're the Wanda Dalian company. They made their fortune, husband and wife, building high-end shopping malls in China, and along the line decided to diversify their investments. And one of the places they came to diversify their investments was the U.S. There's a movie chain on the mainland called AMC Theaters. So they purchased AMC Theaters, and I can't remember the price, relatively small amount of money they paid for it. Just a few $100 million. Hugely successful for them financially. So very recently, they just bought another movie chain in the United States and have now become the largest chain of movie theaters in the world because of these 2 acquisitions in the United States. Having this, what I'll call it cash flow, offshore, not in China, same with Haier, this new cash flow, offshore, not in China, allows them to do is to bypass any state administration in China. Because, oh no, thank you, we don't need US dollars. We just happen to have suitcases full here.
Yeah.
So it allows them to, in a much less supervised manner, continue their investments.
We should watch them. Maybe we can learn from them. Let me take a break, okay?
Yeah.
Larry Foster, former dean of the William S. Richardson School of Law, now a professor there, teaching, among other things, gee whiz, all about direct foreign investment. And we're discussing that today with him. We'll be right back after this short break.
Aloha! Hello, my name is Patrick Bratton. I'm host of Global Connections here at ThinkTech Hawaii. We broadcast live every Thursday at 1 p.m. We bring Hawaii to the world and the world to Hawaii, talking about international events and various things of interest to the audience. Please join me. I look forward to talking with you and having you get to meet some of my guests. Aloha.
Aloha, this is Maria Mera, and I'm here to invite you to my bilingual show, Viva Hawaii on ThinkTech Hawaii, every other Monday at 3 p.m. We're here to inform, motivate, and entertain you. Join us. Hola, soy María Mera y estoy aquí para invitaros a mi show bilingüe Viva Hawaii en ThinkTech Hawaii cada 2 lunes a las 3 de la tarde. Estamos aquí para informaros, motivaros y entreteneros. Apuntaros.
Hi, I'm Ethan Allen, host of Likeable Science on ThinkTech Hawaii. Come join us every Friday at 2 p.m. when I interview interesting scientists about what they do, why they do it, and why we should all care about it. It's a lot of fun to see. We hear, and you can learn interesting stuff. You'll hear all kinds of fascinating science, and we know you'll have a great time. Hope to see you then.
Okay,
Bye-bye.
we're back. We're live. 2 o'clock rock with Larry Foster, learning things we never imagined before. So the Dalian guys really made a score here in this country.
So Wanda.
Wanda.
It's Wanda Dalian.
Okay,
Wanda is
Dalian.
the company. Dalian means that their headquarters are in Dalian.
Okay, all right. So, I mean, what's interesting about it is that they could figure out how to make a bundle of money and develop all this cash flow on our turf, and we couldn't. No American investor did that. They did that. You got to give them credit for. We should learn from them.
Yeah, there's been some discussion, and I don't know all the details on it, but in the United States, there was some concern a while back that live streaming would destroy the American movie theater, and that's really not happened. And American movie business is booming.
Yeah.
And
well, wait till you see ThinkTech get right. Get started proper. You'll see the change.
There you go.
Yeah,
there you go. There you go. But smart businessmen look to where the future is, and that's what Wanda Dalian has done.
We're right. They called it. They called it in a market that wasn't naturally theirs.
Yeah.
It's really interesting.
Yeah. So that brings up an interesting point. So in 2010, the government came up with this slogan. It's sometimes translated as invest overseas. Literally means go out. Go out and invest.
Stand up.
Yeah.
Go out.
Yeah.
It's connected.
And the idea was to sort of go out there and buy some technology that would be helpful for China, build the China brand, all of these kinds of things. So it began as with many government policies, had a good maybe a good purpose to it. They encountered some problems with it, with the policy. One of the problems they encountered with it was that companies like Haier, very sophisticated, Wanda Dalian, very sophisticated. Not every state-owned enterprise and private enterprise in China is sophisticated. So what they saw in the first years of the policy was an enormous percent of these investments failed. These overseas investments, these overseas acquisitions.
Lost the investment.
Lost the investment. Hundreds of millions, billions of dollars. Curiously mirrors what happens to foreign direct investment coming into China. and exactly for the same reasons. If you're not sophisticated, wherever you're going into a market, if you don't know the market, if you don't know the politics, you don't know the economics, you don't know the laws, you get bad partners, you don't do your due diligence. They did and continue to violate every good rule of foreign investment, just as the Americans have done for the last 30 years.
So it goes both ways. That's so interesting.
It goes both ways. So those lawyers in China who for many decades represented U.S. companies coming into China, not all of them, but some are saying, yes, payback time. Now the Chinese understand what we've been going through. So part of it is this government policy to go out. So they've made it easier, which was very helpful. The other reason, and this is more on the private enterprise side, but I should point out that most of these foreign direct investments by dollar volume and number of projects now are private companies going out, not the big state-owned enterprises.
Is there a reason for that?
Yes, and the reason is, a reason is things are going slow in China. Well, a couple of reasons. On the economic side, it's, 10 years ago, you invest $1 in China and you make $10 overnight. So that's where the action was. So all the Chinese investors were staying home and making a lot of money. Now things have slowed down dramatically in China, so they're looking around to where can they make better money on it. On the political side, things are getting complicated in China on the political side. And those high net worth individuals, and Chinese companies by and large are hierarchical. It's not a board of directors that tells the president what to do. It's the president who says what he wants to do.
So like the government.
Yeah. So they're looking at ways to diversify their assets. And wouldn't it be nice if they also diversified them from renminbi designated assets to British pound assets or US dollar assets? Give them a little bit more political risk stability. So some of the investments we see are sort of for that more of a personal reason.
You mentioned before the show that you had looked at the trends.
Yeah.
And I wonder, I would guess that all of this gives us a trend of bigger and bigger deals.
Yes.
More aggressive investing, if you will, and sexier investing too, by not the government, but individual companies, small companies, big companies, what have you, who are coming to the U.S. and probably Europe as well, and probably all over Asia. I mean, it's like, first you have tourism, and then you have people who sort of follow on that to make investments everywhere they go, and the world is their oyster. And I would guess, tell me if I'm wrong, but their investment is much broader around the world, much more adventurous now.
Yes and no. It changes, and one of the exciting things about China is that it changes in a second. So if you were a China expert yesterday, you are no longer an expert today, because things just changed. So we see that with the foreign investment as well. The initial investments that were coming out, we're looking at, for example, the Chinese investment in Australia. They were buying raw materials for the furnaces of China. Coal and ores and all. It's not my industry, but they were just buying up mines all across Australia. Australians were, as a people, some of them not happy about that.
Yeah.
So that was a lot of the initial investment, and also they were going out looking for technology. Technology's expensive and complicated to create. So why create it when you can buy it?
Yeah.
So going out and literally buying technology.
Did that work?
Yes, it did. So going out and doing that. But now the investments have become a lot more diversified. And one of the big new areas, for example, is in the, I guess I'll call it the hotel industry. So if any of your viewers read the Star Advertiser, local newspaper, front page today, I think it was in the front page, there's a Chinese insurance company that made an offer now. It's gone up to $15 billion to buy Starwood hotels.
They're in a bidding war.
In a bidding war with Marriott. Everybody started off around 12 billion, now they're up to 15 billion. I wish I had shares in Starwood.
Really? Maybe the Chinese company wouldn't be a bad investment.
Yeah. But this is just the latest in a series of investments by this particular insurance company in the U.S. Hotel industry.
Yeah.
So they started off with a hotel in New York City, the Waldorf Astoria, that they got for a mere 1.2 billion or something.
A little
like
rundown.
Then they bought a series of this company that Blackstone owned. That it was a collection of 15 luxury hotels, and that closed, I think, late last year, I believe, or early this year. And then they went after Starwood, and the offer's up to $15 billion right now.
When we come back from this break, Larry, I'm going to ask you whether they know something we don't understand. Sort of like the the movie chain investors. Maybe they see something in the American future that we in America don't see. That's Larry Foster, teaching at the William S. Richardson Law School, teaching direct foreign investment, among other things. They spent a lot of time in China. How do you say we're going to take a break now in Mandarin?
待会儿见.
You're watching Think Hawaii, exploring the world we live in, recognizing the changes around us, and looking into the future of our lives together in these islands. Great content for Hawaii from ThinkTech.
Hello, I'm Stephen Katz, and I'm the host of Shrink Wrap, which comes to you live every Tuesday at 3 p.m. on thinktechhawaii.com, and then it's repeated again whenever you want if you go to the website. On our show, we will be talking to all different kinds of therapists, psychologists, psychoanalysts, psychiatrists, people who talk about the mind, the brain, and about different ways to find happiness. I myself am a marriage and family therapist in practice here in Hawaii, and I hope you will join us because I've got a lot to learn, you've got a lot to learn, and it's a great ride. Thanks a lot. See you soon.
We're back with Larry Foster, and during the break, he was about to teach me something about legal writing. What was that, Larry?
I teach legal writing at the law school, first year, first semester. And one of the first lessons I teach my students is never, never, never use a pronoun in legal English.
Put the name of the entity right in there.
Yes, so my host keeps referring to they, and I have no idea who they are. Is it the government? Is it the companies? Whatever. But let me come back to a minute for this insurance company.
Yeah.
5 years ago, Chinese insurance companies were not investing overseas. So this is, again, one of these rapid changes. This particular, last year, the total Chinese investment in the U.S. was around $56 billion, dramatic increase from the year before.
Yeah.
This year alone, if this insurance company's deal goes through to purchase Starwood for $15 billion, in the first 3 months of this year, they would have invested themselves, bad at math, $21 billion in the U.S.
Way over the previous
rate
of investment.
Half of last year's total.
Yeah.
So what we're seeing is the pace is increasing, and do they see something we don't see in the hotel industry? Well, Marriott sees it, which is why they want to go into the hotels.
Yeah.
Again, these are sophisticated investors, and they've done their homework. Whether or not Starwood is worth $15 billion, I'll leave that for someone else to figure out.
There's a spreadsheet somewhere that says it is, but
yeah.
It strikes me that maybe they're looking at the U.S. as part of a global network, U.S. hotels as part of a global network, and if they can control or connect hotels all around the world, then the hotels in the U.S. become more valuable as connected to a global network.
Yeah. Well, Starwood is a global.
It's already global.
Already global.
Yeah.
One of our law school graduates is the general counsel for Starwood Greater China, situated up in Beijing. They've been very aggressive in building a variety of range of hotels in China.
It's serious to put in $15 billion and rising, and clearly it is rising. So how do they do that without stumbling? How do they do that? They must have, lots of lawyers, not only Chinese lawyers, but American lawyers helping them through it.
Yes, so this is the, comes back to what we were talking about earlier, some of the mistakes that companies do make when they go abroad.
Yeah.
So I'll come back to this Chinese insurance company, Anbang. In insurance, they're running across two regulatory issues right now. One is back home. The Chinese Insurance Regulatory Commission, I can't remember the exact name, but basically the state entity in China that governs insurance industry is quite concerned because insurance companies are not allowed to invest more than 15% of their assets overseas. And so they're up to 21 billion right now. And the question is, do their assets in China total up enough that they're within the 15 billion, excuse me, the 15%. The Chinese agency is convinced that they violated the law. Anbang is convinced they haven't, so they're having a ongoing discussion.
Quick, sell some more policies, quick.
Yeah, exactly. So at home they're having that issue, and I'm sure that they have good compliance officers and lawyers and advisors who gave them advice on that at the beginning. Coming to the U.S. then, U.S. we have, compared to a lot of the other countries in the world, we have relatively few restrictions on foreign investment. One of the restrictions we have is well, the nickname is CFIUS, and it's the Committee on Foreign Investment in the U.S.
Wasn't it a character in Greek mythology? Never mind.
That was Sisyphus.
Oh, sorry.
And he's still pushing that stone up the hill.
There's a parallel there.
Yeah, there's a parallel. So the main concern of CFIUS, remember the Dubai ports deals and the big Japanese investment? It all had to go through CFIUS for approval, because if there's a national security concern, the President of the United States has the authority to close down the deal.
Wow.
Our presidents have exercised that, seldom exercised it.
Okay.
More recently, President Obama did it in 2012 against a Chinese company. Oh, this is a great story. I'm getting off the mark.
Really interested. It's okay.
There's a Chinese company out of Shenzhen, China, heavy equipment manufacturing. They were getting into the windmill industry. They wanted to bring their windmill turbines to the U.S. to some demonstration sites to prove that Chinese wind farm technology is good and worth purchasing.
That's a worthy project. Yeah.
Worth investing in. So they went to the state of Oregon, and there's a inland from the coast a few hundred miles. I can't remember the name of the area, but it's sort of a valley that it's kind of like Kahuku here. The wind blows 24/7.
Yeah.
And there were 15, 20 wind farms up there. So the Chinese went to a Greek company and said, hey, I know you haven't started your construction yet. We'd like to buy your land. So the Greeks said, sure. So they bought 4 plots of land there and started to build putting in the concrete footings and things like that. They had not initially thought that they would have a problem with the Committee on Foreign Investment in the United States. So they didn't, you can talk to them early on. They encourage early conversations with them, but they didn't think of that because they're just building a wind farm in the middle of rural Oregon.
One wouldn't think of it. I mean, it's not it's not intuitive at all.
Yeah. So it turned out there was a national security concern potential. There's I think it's an Air Force, anyway, a U.S. military base on the coast, 200 miles away, and they are working on drone technology. And this particular, I think it's a valley, or I'm not sure if it's a valley or plain, whatever. This particular area is the airspace is used by the drones. So CFIUS came in and said, I'm sorry, but you are too close to a sensitive U.S. military project. And went all the way up to the President of the United States, and I think for the 3rd or 4th time in the history of CFIUS. Oh, by the way, CFIUS started because of Japanese investment. They were concerned about the Japanese, and then came up with the Dubai ports and all of that stuff. But anyway, so it has a long...
That would be post-1978?
Yes, yeah.
Okay.
So it has a long, interesting history to it. So the president said, no, this deal must be shut down. You need to jackhammer out your concrete stuff, and we will only let you sell it to people we approve of, and all of this. So this Chinese company,
If it had been an American investor doing exactly the same thing, it wouldn't have been subject to that regulation, right?
Right.
Interesting.
Right. So what they did when they set it up, they set up an American company, RALLS, Rawls. Although it was totally owned by 2 executives at this Chinese company. So it was clearly a Chinese company.
Yeah.
But Rawls, being an American company, did what American companies do. They sued the U.S. government, violating due process.
Interesting.
The federal district court agreed with the U.S. federal government. The Court of Appeals sided with the Chinese and said the U.S. government violated the due process of this.
The Chinese are entitled to due process also.
Exactly. So late December, they settled the case. And the Chinese company was allowed to sell it to anybody they wanted to, and they sold it to someone who had been rejected earlier. And they got automatic approval of 2 existing wind farm sites on the U.S. mainland.
This is this past December?
Yes.
Oh,
Yeah.
that's
yeah,
very recent. Yeah.
They reached a settlement on that deal.
Yeah.
So now comes Anbang, who's buying the Waldorf Astoria, and that went up for CFIUS review.
A hotel.
A hotel.
Okay, go figure.
Well, it turns out the national security concern, and one of the problems that some people point out in CFIUS is national security is nowhere defined. So in the wind farm case, it was defined in that particular case as you're too close to a military installation, i.e. airspace with drones. In the Waldorf Astoria, there were 2 problems. One was that it was the home of the U.S. ambassador to the United Nations, permanent home. Has a suite
in the hotel in the Waldorf.
In the Waldorf. Yeah. It's also the place where a guy named the President of the United States stays when he's in New York City. And the last thing you want is a bunch of Chinese spies pretending that they're maids and things like that spying on our stuff. So there was this national...
Or surveillance equipment in the walls, who knows why.
Yeah. So there was that concern. That they resolved that, so the deal went forward. There's rumors of a possible CFIUS review of the purchase of Starwood hotels. I'm not quite sure what all that would involve.
So interesting. Well, how do you feel about this, Larry? I mean, you have a couple of minutes left. I'll let you get your thoughts on it. Number one is, what would you advise the Chinese? Are they in the right place on this? Should they shift their focus on investment in the U.S. and elsewhere? And then from the American side, should they give away, I mean, should they stop with this CFIUS thing and just open the gates, or should they close it up? What's your thought?
No, I don't think it should be. It should be closed. I think the U.S. does have many times legitimate security concerns, and there should be a process for doing that. And CFIUS has been around for a long time, and like a lot of federal government processes, it needs some tweaks occasionally and stuff. But it's good. On the Chinese side, so one of the trends we're seeing now is that from the Chinese government side, that one of the theys that you talked about earlier, the Chinese government side, they're getting a little concerned because so much cash now their reserves are flowing out of the country. So they're trying to sort of slow down the flow of U.S. dollars out of China.
Why? I mean, where, is there a tipping point they worry about? What could happen? Isn't their money safe here?
Well, I don't know if you've ever invested money, but money invested is never safe.
Thank you. There's always risk.
And this is not Chinese money. This is company.
But we're not
money.
going to appropriate those businesses.
I would hope not. No.
Yeah.
I mean, certainly under the law, we could do it. But those are very exigent circumstances.
This is a moving target, Larry.
Yeah.
There's going to be more here.
It is.
I want to take your class.
Yeah.
Or at least I want to ask you to come back.
Yeah.
And talk about the things that happen between now and then, because there will be more investments, more Marriotts, more Starwoods,
no, absolutely.
more money, more billions, more trends. It's interesting, maybe a little frightening, but mostly it's globalization. Yeah. And maybe the Chinese understand better than we do about that.
And we didn't get to talk about Hawaii.
No, we'll have to do that next
Another
time.
day.
Promise me.
I promise.
Or say it in Mandarin.
Well, fa sure.
I knew you'd say that.